History was made again today on Wall Street. Incredible. The Dow surging 5%. That's a 1,293-point gain. It is the largest point gain of all time. On a percentage basis, not at the top, but hey, not bad. Today's bounce back comes after the market had in its worst week since the financial crisis last week. So the question is very simple. Was today's rally an all clear for your money? Bring in Chris Harvey, head of equity strategy for Wells Fargo Securities. On Friday, credit where credit is due, Chris. On Friday, you started advising clients that they could start to selectively nibble or add to positions on names like Visa, MasterCard, and American Express. So good job there. But one day doth not a rally make, despite our use of the word. Do you still think there's more to go on the upside?
So I think there's more to go, but this falls under the umbrella of buying when you can, not when you have to. At a 5% rally, it's hard for us to tell people to chase this rally in the short term. But we do think, and what we want clients to do is we want them to leg in and leg in slowly. So what we said at the beginning of the year is take risk off the table. We expected some 5 to 10% pullback. You got that. And now what confused us earlier this year is the coronavirus. You were paying a 5% premium for access to the coronavirus. Now on Friday, you were paying a 10% discount. That made a lot more sense to us. And we can argue about what that discount should be, but at 10%, that was a pretty good opportunity.
Did today make sense to you and your team?
The beginning bounce made some sense. The afternoon, I wasn't quite sure why things ran up the way they were. And again, we want clients to be disciplined. We don't want them to chase. We think there's still opportunity there. Be selective. But over time, we don't know how the coronavirus is going to play out. And I think you'll have opportunities as we go forward, and there'll be more volatility, and there'll be some downside.
So, Chris, I'm curious. So you're saying on Friday to buy,
right.
It's up 5%. Is that all you're saying maybe don't buy. Is that all you're expecting to get? I mean, so why wouldn't people buy?
No, that's not all we're expecting. So if you go to our price target, you're looking at a double-digit return, somewhere around 10%. But in the near term, if you bought at the low on Friday, you're up 8% in a very short period of time. Again, we can't tell you what's going to change tomorrow, what people are going to say. We know there's going to be volatility. We just don't want you to chase. We think you get a better opportunity. And just be disciplined. Nobody knows how this is going to play out, so leg into this trade.
So, right, you're not telling people to go chase it. But you are still at close to 3,300 for the year?
33.88, almost 34.
The things that made you cautious going into the end of the year, and again, it's difficult to argue the market was euphoric.
Right.
But the world's not only last year's not so great, it's a lot worse. How do you get excited about 2020?
So a couple things. One is we're at 166 on our EPS number. The street is coming down to us. Two, if you look at the amount of accommodation that China's putting on the table, and if global central banks do what a lot of people expect them to do, there'll be a ton of accommodation on the table. I think coronavirus will be something temporary. I think when you look back in 3 months, you'll be happy with these scores. And I could actually raise my numbers in the second half of this year based on the accommodation, based on what we see. And you could possibly see a melt up in the second half of this year. So don't be too fearful. Don't panic. There's opportunity and there's value on the ground.
So, Chris, let me ask you something. Do you think today's rally is already pricing in a 50 basis point cut by the Fed? Would that be disappointing if that's all it ended up being?
So I think there is, I can't tell you if it's 25, I can't tell you 50 or 100, but there is some sort of component to central bankers. There is some sort of component to liquidity and accommodation, right? Will people be disappointed? I think they will. But at the end of the day, we don't think this is a monetary policy issue. We think the markets really need to trade. The markets need to work through this. The Fed's job is price stability and maximum employment. It's not price discovery. And as we look at this situation, I'm not really sure how monetary policy helps. The real big issue for us is when credit markets start to freeze. There's a lot less liquidity in credit markets, but I think if you needed to bring something to the marketplace, you could. It might cost you something, but you still could.
It's interesting. I mean, price stability you're talking about, that's one of their mandates, right?
Right.
Except that the bond market, the U.S. bond market for the last 2 years has been the most volatile it's been in history. This is the United States we're talking about. So they're clearly failing, but yet the market still seems to think that they have this magic wand that can support the markets. At what point, I think right now, 16 trillion negatively yielding bonds globally.
Right.
When does it matter?
I think it matters now. I think on Friday and this morning and even last night, people were worried, Where is the 10-year going to stop? Is it going to stop at 1%? Are we going to go to 75 basis points, 50 basis points? People are still worried, and I think rightfully so. I don't know where it stops. That's why we're talking about, hey, be disciplined, be patient, leg into this trade. The risks are still out there. Things can open up, and maybe you get a better opportunity at buying them lower. We don't know. But to answer your question, yes, it's still a major concern.
And I want to be perfectly clear, because you guys said nibble at Visa and MasterCard, American Express. Stocks are up 6% today. Visa, after hours, did cut its revenue projection by a couple of percent. Are you still recommending those stocks?
So what we're recommending is credit card and processors. And it's really the theme. And the theme that we're investing in, if you look at these, we want higher quality names. They're higher quality names. We want stocks that were down double digits. They were down double digits in a short period of time. More importantly, they pre-announce. We want companies that pre-announce. That means they're on top of things. That makes them, to us, investable. And that means that the management teams, we have a little bit more confidence in the management teams.
Okay, Chris Harvey, Wells Fargo. Chris, it was a pleasure.
Thank you.
Thank you for coming on. All right, so guys, I mean, listen, I think this today was such a, I don't want to say confusing day, but I mean, even Chris kind of said, like, they just didn't, these are some of the smartest people in the business, really understand a 1,293-point rally. The acceleration, especially toward the end.
Well, can I quickly, I don't want to get too wonky on this, but, when volatility spikes like this, you see moves like this. And we, in the business, we used to call it bad Greek or negative gamma, which means when you're short volatility, you got to sell on the lows and you got to buy on the highs. And that's happened in spades over the last couple of weeks. So with the VIX at 34, where it closed today, I hate to say it, but you're going to see more of this, not less.
Hold on there, Gaius Adamicus.
No, I mean,
what is negative in English, please?
When you sell an option, you get paid to sell that option. When you, on the other side of that coin, is you incur the risks associated with that. So although you get paid, there's a risk associated with selling that option. And it's manifesting itself now with VIX going from 14 to 45, closing at 34. So now you wind up chasing, and they chase on the downside by selling, and they chase on the upside. Go back on Friday and look at some of the moves we saw Thursday as well, when the S&P out of nowhere rallies 60 handles only to give it all back like this. That, and friends, is negative gamma, and I'm sure they'll talk about it Friday at 5:30 on the award-winning options action.